Welcome back to Investing Talk Podcast. So today, we're diving into applied DNA sciences.
APDN.
Right, APDN. You sent over some articles and analysis about the company, and well, I guess our mission today is to figure out, what's been going on with their stock lately, what's causing these price movements, and what does it all mean, for investors or potential investors.
Yeah.
We've got info on a reverse stock split, some restructuring they've been doing, recent financial results, and even a new facility they just opened.
Mm.
Oh, and we should probably take a look at the technical analysis too, see what that tells us about the stock, because it's been pretty volatile.
Yeah, definitely a lot to unpack there.
All right, so let's just jump right in.
Sounds good.
Okay, so Applied DNA Sciences, they did this 1-for-50 reverse stock split. Went into effect March 14, 2025.
Right.
And they did it to meet the Nasdaq's minimum bid price requirement.
Right.
So what does a move like that, a reverse stock split, usually tell us about a company and its stock? Why is it so important to stay listed on the Nasdaq?
Well, generally, a reverse stock split, it's not usually seen as a good thing. I mean, often it's a sign that the stock price has fallen, way below what the exchange requires. So in this case, it's the Nasdaq.
Right.
And so by doing this reverse split, they're basically decreasing the number of shares out there, which makes the price per share go up artificially. And staying listed on the Nasdaq, well, it's super important for a company. It gives them visibility, builds trust with investors, and helps them access capital more easily. But if a company gets delisted, well, then trading their stock can become a lot harder. They may not be as appealing to bigger investors anymore.
Right. Makes sense.
So yeah, it's more of a tactical move to comply with regulations, not really a sign that the company's fundamentals are getting any better.
Interesting.
And sometimes, these reverse splits can actually lead to even more short selling or more skepticism from investors.
That's a good point. Something to keep in mind. So aside from this reverse stock split, they're making some pretty big changes strategically, right?
Yeah, they are.
Exiting their DNA tagging and security products segment.
Yeah.
And they've cut their workforce by 20%.
Right.
So what's the reasoning behind all this restructuring? How's it showing up in their recent financials? I know we saw those one-time separation costs of $300,000, and they're saying they expect to reduce annual payroll costs by 13%.
Right. Well, I think what's really interesting here is that they're clearly shifting their focus to their therapeutic DNA production services and their MDX testing services. When a company decides to exit a business segment like that and reduce its workforce, it usually means they're trying to streamline things, concentrate on the areas they think have the most potential for growth, maybe better profit margins.
Yeah, that makes sense.
So yeah, the $300,000 for separation costs, that's just a short-term hit. But the potential 13% reduction in annual payroll costs, that shows they're serious about cutting expenses.
Okay.
And we should start to see those savings reflected in their financial reports down the road. But of course, there's always some risk involved when you leave behind an established business, even if it was struggling.
Yeah, for sure. So let's look at their Q1 fiscal 2025 financial highlights then. They reached $1.2 million in revenue. That's a 34% increase year over year.
Right.
Sounds good.
Yeah, on the surface it does.
But at the same time, they also reported an operating loss of $3 million and a net loss of $2.7 million. And their cash on hand as of December 31st, 2024 was $9.3 million. So how do we make sense of this revenue growth alongside these continuing losses? And what does that cash position tell us about how much runway they have?
Okay, well, if we think about this revenue growth in the context of their strategic shift, it's definitely a positive sign. Could mean they're making progress in those core businesses they're focusing on now, but they're still operating at a loss. So it's clear those revenues aren't enough yet to cover their expenses.
Right.
And that $9.3 million in cash, well, it gives them some flexibility, but they need to watch their burn rate carefully. It's a matter of how long they can sustain these losses, especially while they're investing in things like the new facility before they might need more financing.
Right. Which brings us to the new facility.
Yeah.
This seems like a potentially big development. They completed their GMP Site 1 facility, and it got commercial operation certification in January 2025. So this facility is all about the enzymatic manufacture of linear DNA IVT templates. And those are key for producing mRNA for clinical trials. And their estimates for potential annual revenue from this facility are somewhere between $10 and $30 million. That's a wide range, but even on the low end, that could be significant. So How could this facility be a game changer for applied DNA sciences, and what are the key things they need to do to actually reach that revenue potential?
Well, this facility definitely has the potential to transform the company. The market for mRNA clinical trial materials is big, and it's only getting bigger.
Right.
So if they can successfully land contracts and run the facility efficiently at scale, those revenue projections might become a reality.
Okay.
But there are some big ifs there. They need to prove their manufacturing capabilities. They need to meet all those strict regulatory requirements. Remember, GMP stands for Good Manufacturing Practice.
Right.
It's a standard for pharmaceutical production. And really importantly, they need to secure agreements with, biotech and pharmaceutical companies. It takes time to start generating revenue from a new facility like this. So we'll be looking for concrete evidence of partnerships and production in the next few quarters.
Okay, so potential's there, but we got to wait and see. Now let's talk about the stock's performance. APDN, it's been a bit of a roller coaster. The average weekly movement is 23.2%. That's way higher than most U.S. stocks. It even jumped by almost 15% just in the last 24 hours. But looking back over the past year, it's underperformed both the U.S. life sciences industry and the overall U.S. market, down 64.3%. What do you think is causing this volatility? And how should someone like you or like our listeners who are trying to get up to speed quickly, how should they interpret these big swings?
Well, this extreme volatility, it probably comes down to a few factors. First, the company's market cap is relatively small.
Right.
Second, they're going through these major strategic shifts. And then you've got potential speculative trading around news like this new facility and these recent price jumps. It's all playing a part. And, for you, the listener, it's important to remember that these quick price changes, they don't always reflect the real value of the company. Short-term gains can disappear just as fast, especially with a stock that's had a history of underperforming. It just shows how speculative investing in these kinds of companies can be and why it's important to look past those day-to-day price movements.
Yeah, definitely a good reminder. So what does the technical analysis tell us? It's recommending a hold in the stock right now, pointing to the recent price increase, but also the longer-term downward trend. The stock is currently trading below its long-term moving average, but these recent price increases could mean it's about to cross over above some short-term moving averages. And the RSI, that's the Relative Strength Index, it's a way to measure recent price changes and see if a stock is overbought or oversold that might be getting close to overbought territory. How does this technical perspective line up with all the fundamental stuff we've been talking about? And what are some key levels or indicators that someone who's following this stock should be watching? I know we've seen prices between 1.72 and 1.92 lately, and trading volume has been pretty high with over 2 million shares traded recently.
Well, the technical analysis is basically saying that there is some upward momentum in the short term, but we're still within a larger long-term downward trend. So this potential crossover above the short-term moving averages, it might attract some short-term traders, but the stock is still below that long-term moving average, which means the overall trend hasn't necessarily reversed. And the RSI approaching overbought, well, that could mean that the recent price increase is losing steam and we might see a pullback. So some key levels to keep an eye on would be resistance levels around previous highs and support levels where the price has found buyers in the past. And that high trading volume means there's a lot of interest, but it doesn't tell us for sure whether it's mostly buying or selling pressure in the long run. Just reinforces the idea that you got to look at both the technical indicators and the underlying fundamentals.
Yeah, that makes sense. So to sum it all up, we've got a company making some big changes to try and tap into potentially high growth areas like therapeutic DNA production. That new facility they built could be a major catalyst, but it's all happening while they're still losing money. And the stock is still pretty volatile, even after that reverse stock split.
Yeah.
And the technical analysis adds another layer of complexity here. It's saying, be careful, even though there's been some upward movement lately. So the big question for you, the listener, is do these short-term speculative opportunities line up with the longer-term potential of their work in mRNA technologies? It's a dynamic situation with a lot of moving parts. Definitely something to keep watching. And hey, if you found this breakdown helpful in understanding all the complexities around applied DNA sciences, please subscribe, like, and comment to let us know what other topics you'd like us to explore in depth.
Yeah, we appreciate you listening. Thanks for tuning in.
Thanks for being here.